Good afternoon, everyone, and welcome to Full Transparency Trading from Scratch. Let me make sure that I'm on the camera here. Okay, I am in the camera. Cool. In this series, I'm going to teach you from the beginning steps what it is that I learned that has allowed me to make 1,000, 4,000, 5,000, 6,000. It does just a ridiculous amount of money per day while day trading. The principles that started from the very beginning and all of the little idiosyncrasies and nuances that you need to learn along the way to becoming a successful day trader. This series is very important because I'm taking you from the beginning. Something so simple as what is the candle and what is day trading to now, a year and 4 months in, where I can very easily click a button and make $3,000. I can very easily click a button and make 200, 500, just a ridiculous amount of money because of practiced habits. But first, we're going to go to a very important question, and that is, what is day trading? And I'm going to show you, I just Googled this just now. I'm going to show you the lie that they're going to tell you again and again and again. But here's the definition. Day trading is a strategy that involves buying and selling securities within the same trading day to profit from short-term price changes. Day traders often borrow or use leverage to purchase more assets, which increase the risk. Day trading can be profitable, but it's also risky, time-consuming, and stressful. That is a lie. That is a 100% falsehood from a certain aspect, and I'm going to tell you in just a second. Most non-professional day traders aren't successful in the long term. This is what they want you to believe. They tell you this going through the gate. Right out the gate, they tell you most non-professional day traders aren't successful. This part is partially true. This part is a lie. There are ways to limit your risk, to have more success, and have it be far less time-consuming and stressful. And that is why you start on your early days developing 1, good habits, 2, your technical analysis, 3, control of your emotions, and 4, proper knowledge. You need to do something that I did from the start, which is, I don't care if you find one for free or if you pay for one, you need a mentor in this game who has had success. Key. Not you need a mentor in this game who's just a guy who's doing it as well. You need a mentor in this game who has had success. I'll take you over to mine for just a second. This is Christopher Jackson. He has had success. Our trading styles are very different, but I got my brand of success through learning his trading style and then moving on to my own. And that is the key of what you need to understand about day trading. Everyone's experience is going to be unique and individual, but anyone can tell you a little about day trading. A successful trader can teach you the habits that you need to form in order to have sustained success. And the key here is sustained success. The reason that majority of day traders aren't good in the long term is because they quit early on. All right, now to the next part. The very beginning of trading, the first thing you need to know is, what is a candle when day trading? Here is the definition, and I'm going to show you some differences about the definition here. In day trading, a candle represents a market opening high, low, and closing. Incorrect. Price from a specific time period, such as a day, hour, even a minute. Candlesticks can be used to analyze the market sentiment and reversals, and traders use candlestick signals to identify short-term trends and execute trading strategies. Another partial truth. What a candle really is, and we'll go right over here to the chart, at its simplest terms, it's order flow. It's the flow of the orders, because you're buying and selling commodities in the form of orders. So it's your order flow. If the trend is going up, the orders are going up. They're buying orders, more orders, more orders, more orders. Pull back, they're selling some orders. They're buying more orders, more orders, more orders. They sold some orders. They bought more orders, and then stopped right there at the 200 EMA. A very important line that we'll talk about in a later video. But this video is just the simple basics of what is day trading and what is a candle. And a candle at its simplest forms, yes, it represents the opening and closing. But if it was the opening and closing, would it just be one big red candle or one big green candle? Oh, the market opened down here and it closed up there. The market opens at several markets, by the way, open at different times of the day. So it's not the opening and closing of the market. It's just the start of the order flow and the end of the order flow per minute, per 5, per hour, per day, per week. Doesn't matter. Now, if you're in the week, then sure, you're one candle there, one candle here, one candle there, one candle here. By all means, it's a week-long candle. But it's just the flow of the orders. The flow of the orders since October has been steadily increasing. Now, you've had days where it goes down, you've had days where it goes up, but it's been steadily increasing since October. Prior to October, we were steadily decreasing. And that's a trend. The trend was down, the trend has shifted up. We never looked back from that uptrend in October. For you long-term traders, this is more important for you, understanding times of the year and when a trend is going consistently for months at a time, weeks at a time, or whatever the case is. And now we are at an all-time high. Today, SPY hit $537. You cannot see it right here, but the current buy and ask price of SPY is over $537. Futures creates the market, which is what I'm trading, and then SPY is your options market, and so on and so forth. It doesn't matter what you're trading. It doesn't matter if you're trading futures, if you're trading Bitcoin or digital assets. These charts are all exactly the same. But that is video number 1 in the series, and we'll get into how to use a candle to make money in the next episode. But for the start of things, to simplify beyond what you're going to be hearing again and again from different people, is a candle just represents the flow of orders for that time frame. For this particular week, the order flow was mostly down. For this week, the order flow was up, but it also pulled back down but stayed up. So it was up from here, went all the way up, and then pulled all the way back down. From here, it burst down and then started to pull back. For the next week, it started to pull down further. For the next week, it started to go up. The flow of the orders, the overall flow of the orders, the greater than. The overall flow of the orders is up. For all of these weeks. For 5 minutes, it was down, baby. You're straight in a Range Rover. All the way down here, and then all of a sudden, from the point of the market opening at 9:50, it was just up. Order flow started going up, buying and buying and buying. At its simplest terms, it's selling and it's buying. But what you need to figure out is levels of which they're selling to, levels of which they're buying to. And you'll notice something again and again. Notice this white line here, right? 1, 2, 3 times for 5 minutes, for 15 minutes. We couldn't get through this white line, but just a little bit. Just a little bit. But it all settled right here. So that was the end of the level. We will get into levels in the next video. But this is the simple beginning of what is day trading and how to make money. Episode 1 down, video 1 down. Next video is coming shortly.